Yeah, what we're gonna work on, I'm gonna cover the market update for us, and then what the prep moving forward, what happened, and then let's go over some technicals so we could brush up on our entries, understand reasons, looking at areas to take profit. If you guys have any questions, don't hesitate to reach out. Okay, so take advantage of this, all right, especially if you're dealing with a little bit of struggles, right? I don't feel like none of you guys are struggling with it. Like the problems that I'm getting is you guys want more money. like like catching the gold cells is like people's getting out too early. You know what I'm saying? So the issue that I'm getting, that I'm seeing you guys' issues are how could I make my trade run longer, right? And what I told him is, and I get it a lot. I get this question a lot, and you're going to deal with that forever, right? Because you have to realize it doesn't matter how much you make, right? You're always going to fight that greed. All right. So I just want you guys to understand that. Like right now, it's like go drop, you got 3,000, not 4,000, 20,000. It don't matter what it is. You're always going to leave money on the table. You know what I'm saying? It's never going to be enough. So when you're feeling this way, that's how you know you're acting more towards emotions, right? You're being more emotional when it comes to your take profit instead of being just logical. So with trading, you have to try to limit as much emotions as possible. This is why having a structure, take profit, stop loss, right? Having reasons to enter. A lot of this stuff is limiting the amount of emotions that you're putting on the table, right? Because when you're emotional, that's when the over leveraging comes. This is where you close trades too early. This is where you close trades too late, right? This is where it's never enough. You're always going to feel that. It don't matter if you make $10,000 here, $5,000 there, or you make 100,000. You're always going to feel that you can make more from that trade. The reason why it's bad to think that way is because maybe gold pushing lower today was because we obviously knew the reasons behind it. And that's what set up for this current opportunity. But what happens is you looking at the next trade with the same idea, and maybe that next opportunity probably won't play out the way that you expected it to, right? Maybe that next trade would have been better if you took a scalp, but you're trying to trade the next trade, right? As if you're doing this current one. And every opportunity is always going to be different. There's always going to be different reasons behind it. Okay, guys? Does that make sense for you guys? Like, does that help? Put a one if that makes sense. Because that used to be my problem too. We all deal with it. It's like, damn, man, like how could I caught the whole move? You never will. You may once in a blue, you might get lucky, right? But you never it's never gonna happen, you know? So what I care about the most is, are you hitting what you like? Are you hitting your targets? Right. So we're going to go over that, and whatever, whatever is best for your strategy, right? That's what you grab onto. Okay. Because everybody looks at the markets differently, but whatever best fits for you, that's what you take, okay, and that's what you add towards how you trade, all right, because some people trade gold, some trades equities, some trade currencies, right? Equities is in a different is a different language compared to gold, right? So you have to look at what best fits your style, and whenever I say something, you're gonna be like, okay, yes, that's pretty good, so that's what we're gonna go over here, right? So looking at gold, right, you could just tell, like, the market structure that happens with gold kind of does repeat itself over and over. But even if it's not gold, we just don't look at this at all, right? Because the price action, just from how long I've been trading for, right? Yeah, Lizzie, I'm gonna post it. I got you. Don't worry about it. It's gonna be recorded. So it's the same thing as with GJ, right? I like market kind of choppy is a hard idea now, but GJ does really good technicals. UJ, currency pairs in general, it's all the same. Okay. But we're just going to we're going to talk about entries, right? From how I like to look at entries. So I like to cover them too, take notes, right? So you guys could have a a sticky note, right? So you can understand. I like to look at it from two scenarios: high risk entry or safer entries. So that's how I like to label them, right? So high risk entries, we just want to focus on technicals at this moment. And we could just cover it from right here. When we're looking at, like, this is a resistance, right? So we're looking at this resistance. And if we're looking at an entry as price is pushing up at this zone, and I'm looking for a sell, the fact that price is not breaking below support, right? And if I just do this replay, right? Just go right here. So the fact that price is not breaking below a support and I am looking to buy at this, sell at this high. This is what I considered a high risk entry because technically price is not breaking structure to the downside, showing us that price action wants to push lower. So the difference with the high risk entries, right? It's you get a better reward from it. Makes sense, guys? So you'll get more money, you'll get more pips, but you're getting in before the markets actually fully shift. So that's why I consider these entries high risk. Even if we have a reason for gold sells, right? It I still want to see a break of structure, right? I want to see either a break of support, obviously, whatever the reason is that we look for the gold sells, right? I want to see a break of this support in order for me to take this sell because once we start breaking that area structure, it's a higher probability. Price has already proven to us that it wants to push lower. So when we break below this zone, this is why I consider a safer sell because that's where price is already breaking below support. If I'm looking at entry at a high risk zone, right? Obviously we could see that we're rejecting support. Resistance. We're rejecting this resistance zone. And it's okay to just go to the 5 minute if you see, right, a little like just an area of structure. So we already saw the 30 minute, right? This was the 30 minute here. We're doing the same price action, but it's just the lower time frames, right? Because in a 30 minute, this is just one candle. But even here, you could just see the break of structure, the break of support, the candle closure. That could be an entry too, but we understand that's more of a high risk type of entry, high risk type of scenario. And then you just want to continuously see it break structure, but in the lower time frame. So I like to look at the 5 minute for my entries because we could identify these little breaks of structure, right? This is what really helps us out. We could also, if you want, some people go to the 1 minute too. I don't think the 1 minute is necessary, but you could still see a shift in structure when you do that. You could also go to the 1 minute. So I would recommend anything below the 15. That's where the time frame where you should be actually looking for your entries. Okay. Anything below the 15 minute, I think it would be ideal. Okay. And as we could just see, price just continue to push lower. You could have obviously won on a high risk, but the safer entries, at least you have a little more confidence, a little more, just a little more, what's the word? Confluence, right? Multiple things adding in your direction just for those cells to actually play out and hold for you. That's how I like to look for my entries. And the same thing for buys, right? So we could just see this area of interest. It's just breaking of structure. So we identify an area of resistance. And once we get the reasons behind it, but you just want to look at these type of entries, these nice candle closures above structure, that should give you the confidence to look for a trade. Normally we get to see these type of entries be forming at certain key times, right? Like Asian session after 9 p.m. If that don't happen, London session, it could be anywhere from like 12 or 3 a.m., right? New York session, typically after 9:30. We see that there's volume coming in after you get a break of structure. You want the volume to go within the direction of your pair. So if gold is breaking up, you want to make sure that dollar's weaker, yields are weaker, or we got a news headline that's confirming market fear, or if we have economic data supporting a weaker dollar, right? So when we get that break of structure, this is where you can have a little more confidence to enter that trade, okay? Because the problem is a lot of our losses is going to come because we're not waiting for these type of structures to form, right? Because when you don't see the structure to form, I understand that we just go through this feeling of, oh man, we're going to miss out, right? Some like a scenario here. prices pushing lower, obviously, because we have news. But what's happening with structure now? You could just see that price action is forming. And I love these type of scenarios because price action has to either break in either direction. It's like, to me, I like to look at it as it's just like a bunch of orders is just stacking up together, right? We don't have no decision yet and is waiting for a reason just to break out. And the time that it breaks out, right, it makes it even better if we have a reason behind it, right? Or if we have volume that's like in the volume that is happening as that breakout is coming at a really good time zone. Okay. So the way I like to look for entries is pretty simple. I want to see either we break above, this could be the safer entry. Most of the time, that's what I look for during these time zones, especially when there's nothing going on, right? Or if we break below structure, because it's just a higher probability when we break out of an order block, it is a higher chance that markets is going to push that price in that direction. And it's just one stage though. It's just technicals. But when we add probabilities, data, news, into market analysis, right? Where we could stack the probabilities in our favor, that's what helps you build consistency. Because sometimes, like, even if you get a technical break of structure, but you have a checklist, let's say, well, I want to break a structure, I want data or news also to confirm that direction, or into market analysis. I want to see weaker dollar and weaker yields in order for me to take those gold buys. You could build a checklist before you take an entry. Because yes, there are times where you could get caught into something like this, right? You're marking up this type of zone and then you bought at this breaker structure, right? But what could save you, right? If I ask you guys, in order for you not to get caught in that type of scenario, what you think would have saved you from catching that entry? What I already explained it, right? So what would have saved you from not entering there? So even though that there was a breaker structure, what would be one of the reasons why you would have never taken that trade? Yep, not having an overall sentiment, right? Fundamentals. Me, the only thing I looked, this happened at 8:30. Exactly, Natalie. There you go. Lack of volume is 8:30, right? So when you have a checklist, even when you see something like that, the undisciplined version of you would say, "Oh, that's a break of structure." You get excited, FOMO. You would enter, right? Even if this trade continues and pushes higher, like, I don't care. I miss out on it, right? Because it's not marking that check out the box. So just one little thing, right, could have saved. Imagine how many people got destroyed on that buy today. And that's not paying attention to data, focusing only on technicals, right? Not paying attention to volume, right? Don't even know NYSE open, right? So you could just see the separator, right? That separates traders from understanding this information, the ones that don't, right? Look, I said this before. It's easy to be a good trader. You're gonna see all the videos. Everybody gonna be successful when the markets is just one direction. That's Bitcoin, that's gold, that's equities. Everybody is extremely successful. But when the shit starts to reverse, that's where the real identity comes, right? And how are you able to start shifting and adapting? And that's all from fundamentals, having reasons, having a checklist, knowing when those shifts is going to come, right? So that's when you're going to have to start dialing it back a little, right? Because probably 3 weeks ago, this would have been a great buy, right? That would have been a great buy. But understanding the shift, that's what could save you from being caught in those type of trades. So you get what I'm saying? So when it comes to, oh, how do I not get caught by reversals? It all comes down to having a checklist. Is the entry happening at your time, right? At your time of volume? Is there reasons for it to push higher? Is the market structure confirming it? Right. So when you have a checklist, and you just have to two or three, right? If you have five, you want to make sure it's three or above. You have three, it has to be two or two or above, right? If it's one, don't take it. So have a checklist that could fits your confidence level that could help you trade a little more successfully. Okay. And like I always say too, When a trade goes against you guys, like y'all know what it looks like, right? Y'all know how it feels. When you're in profit, shit is effortless. It's just like just green, there's money coming in. It feels like every candle is going in your direction. There's no fear. It's just lovely. But when the markets go against you, that's when the hope comes in place, right? That's when you like, man, I hope I hope this goes, shit. Like, oh man, like I hope this goes in my favor. You see a bearish candle, you're like, oh man, should I close? Oh man, I wonder if I should close right now. Like, oh man, all right, let me just move my stop loss a little longer. You emotionally know when a trade is going against you. You know when a trade is not right. When you get those feelings, act logical, right? Because as we could just see here, the 30-minute looked great, right? Because obviously this is an area of resistance. Most of probably people is entering on this candle. The moment we broke below this area of support, you'll be looking for sells. That's how you know the trade is going against you. That's how you know when you're in the opposite side of the trade, is when price action is going in a direction where you will be entering those positions in that direction, right? So that's how you know, because we're very familiar when price is going along with our direction. So you have to be familiar when price is not. Okay, guys? So don't fight it. Don't hope. Be strategic. If I see price action is breaking, I'm like, damn, I'll be looking for sales right now. That's when you start adjusting out of your position. That's when you close your trade, because you could be very good at your risk management, right? If you could work on this skill, because if you could be very good when it comes to risk management, right? So say you took this entry right here and you have your stop loss is below this area of support. And then say this is your take profit, right? Right? So that's your trade. You already know I'm already risking, say I'm risking $5,000 for this trade, right? I already know how much I'm gonna lose. So the moment this is coming down, you're like, bam, all right, -5. You're like, okay, -500. And once you see this break of structure happen here, you're like, okay, -1,000. Bam, you could just close out that trade, right? So you could risk, like, you could really work on risk management and the losing side of your trade as well. Like, imagine how successful you can be when you're risking 2% and you risk 2% for that trade, but then you're able to manage yourself out of it at like 0.5%. You see what I'm saying? Most people don't think that way. We don't overly manage our trade when it goes against us, right? Most of us just over leverage. Most of you just, it hits my stop, it hits my 2%, it hits my 2%. And there's nothing wrong with that as long as you have proper risk management. But you could also manage your positions a lot slower. You can make your stop losses less too when you can start identifying the shifts going against you immediately. All right. Because that's a good strategy to use to help you stay. Because now, when you have that risk management plan, it is very, very hard to just go downhill, right? Because you are having a strict risk management plan. And when you win trades, you're not just winning 1%, you're winning like 5%, 6% trades sometimes, right? So imagine how successful you can be if you take that part of your trading a lot more seriously. All right. So now, when it comes to, we could talk about stop losses, right? Just so that we could have an idea. I like to place stop losses at areas, right, of interest, like I said, where the trade could be invalid. That's how I like to look at it. How you want to judge is up to you. So say, let's fix this. I want to enter a sell right here at this break of support. Most people will probably put your stop loss right here, right? Like probably right above that wick, right? That's how most people do it. That's an emotional stop loss, right? That's not logical, because like any pair could literally do some, it could literally do something like this and then just drop afterwards, which happens to a lot of us every day. It happens to all of us. right? You have to put your stop losses at an area of interest where the trade would be invalid. You have to always think of that. The trade is not invalid because it broke above here. Yes, is there a possibility? Of course, is there a possibility that it breaks up and then it just continues? Yes, there is a possibility. Could you manage yourself out of it if it does that? Yes, you could do that too. But there's also times where it could just wick and then it still closes below that zone and then drop for the remainder of the session, like something like this over here. So to avoid all of that, right, you have to put your stop loss above an area where you feel like your trade is no longer valid. Where if it breaks that structure, you was totally wrong with the trade. That's how you have to place your stop losses. Is where if it hits your stop loss, then it means you was 100% wrong. You're not 100% wrong if you have your stop loss here, here, here. You're not wrong. It could tap and then reverse, right? So in order to give your trade breathing room, I don't care what happens in here, right? But in order for me to be extremely confident that I am wrong with this trade, it has to break up above structure and it has to completely tell me that I should be looking for buys. All right. Or if we have a reason, right, that would signal the opposite direction, where if we get a news headline or economic data or something that could push the markets in the opposite direction, and you know that, that will be a reason for you to close the trade early, right? But when it comes to this, because anything could happen with these wicks, right? And you could get stopped out with a wick, and then the candle closure would still go below that zone, right? And the wick is what got you out. And we can't control the wicks, right? But we can most likely control us putting our stop loss a little higher. And most people will say, but damn, that's like 60 pips. You got to lower your lot size then. You're not trading according to you have to trade according to your risk, not just the lot size that you choose, right? Because if you have $100 account and they give you that 1 to 1,000 leverage that we all love, right? Yeah, I want to trade 100 a standard. That's 10 pips is like 10 pips is you're out. Right? So it's like you can't trade just the lot size that you want. You have to use the lot size that is equivalent to your risk management, to your lot, how much percent you're risking per trade, and then the lot size has to be judged for your stop loss. Okay, so if I'm risking 2%, 2% of my whole account of 60 pips. Okay, so there's brokers and there's all these platforms that does it for you manually, where you don't have to make the decision. You don't have to think about it for yourself. Just use the platform to adjust your risk management for you, right? Think about being safe. Think about protecting your account. It's not about it's not about the reward. If you could think about being in the game long term, right? The rewards is guaranteed to come. The profits is guaranteed to come. People don't seek rewards because they're too busy blowing accounts. You don't have enough knowledge to even get you through a week with one account. Most people go through 6 accounts in a week, right? They don't understand what they're currently doing wrong or right, because when you're blowing an account, that's all you think about. But when you could focus on surviving, let me survive. I want this account to survive. Where you think about how much I'm willing to lose instead of how much I'm willing to make, that will be the separator from you and everybody else, because everybody's just thinking about how much they make in a trade. Very probably not even 1% of people think about how much I'm willing to lose, right? They don't do that. So this is why you have to think differently from everybody else. And that's what's going to be a separator, because all you have to do when you're consistently trading this way, you are eventually your biggest problem is when to take profit. That's going to be your biggest problem. But then eventually all you have to do is the same thing every single day, but you're just increasing your lot size. And that's when the money starts coming in. It's not going to do that first, right? You got to focus on surviving first. Once you learn how to survive, once you learn how to take a L, once you learn how to be consistent, that's when the gaining is going to come. Okay? Because I know people that could have a successful a month, but they cannot handle a loss. They could win 10 trades in a row. They take that one L, that one loss. They would just use that one loss to blow their whole account. They will use that one trade that they lose to jeopardize 10 trades of winning. And a lot of people do that, right? Because they get emotional. They don't use proper risk management. So it just doesn't matter, right? Who you learn from. It doesn't matter what strategy you have. It doesn't matter how good you are. It doesn't you could be the best at this. If you don't use proper risk management, it don't matter. You're going to blow your account. It don't matter how good you are. Do not listen to these guys on social media. Do not listen to them. If they're trading recklessly the way that they are, imagine what their losses look like. Because you guys trade every day. You guys trade every day. So if you like, where's like you see that drawdown he had and he held through all of that drawdown, almost blew his whole account, but he showed a profit. But if he's doing that every day, imagine the amount of money they're losing that they're not showing us, right? So risk management is one of the things that retail traders lack. There's a reason why hedge funds they're not winning 100% of the time, right? They're winning. They probably have very low percentages, like probably like 30%, 40, maybe 60. But it's because they use proper risk management. All right. So this is why it's extremely important that we talk about this. At least now you guys know where to place your stop losses. Make sense, guys? Put a one if you guys are good. Because now we're going to talk about take profit, which is very simple. I like to keep it very simple, right? So we just talk about up here, and I know it's gold, but all the pairs do the same thing, guys. It's not. It is not. It's not like gold does this. All the pairs do the same thing. Gold equities just move a lot quicker than others, but the price action, market structure is all the same thing. All right. But when it comes to take profit, right? So say we enter at this break of structure, right? We enter at that break of support. And when I say here, just make it directly what fits your style, right? What I think is best is if you're just trying to get successful, you look to the left and you look at a key zone where price hit, right? This is like one area right here. You drag it to the left. This is one right here. You can look to the left. Okay, this is one. You can look to the left more. You can say, okay, this is it, because price action to the left, right, is showing you every time price hit that zone is showing you rejections. When you are just trying to learn to just be right, when you hit that first zone, just focus on hitting your first take profit, hitting that first zone, call it, right? But what I like to do in the beginning, when you hit that first zone, make a decision. Either break even, take partials, or take profit, right? Until you start building consistency, you start journaling, then you start like getting better, how you could hold on trades longer. But at first, it's just about winning, right? It's just about, it don't matter about the profits, it don't matter about the money, it's just winning, just be right. Okay. So when you learn to be right more times than not, this is where you could separate them, where it's like, okay, well, this could be TP1. You could say this is TP2, this is TP3, right? You could do it in that way. Most people's problem is like, oh, I want the trade to run longer, right? If you trade like a 5 lot and that's like 2% of your account, right? That's 2% of the risk. You could do two positions at 2.5 and another position at 2.5, and one of them could hit take profit one. You could close that one completely. The second one, you could break even, or you could just try to let that trade run, right? That's one way you could do it to see if you could have trades that could last longer. Or, right, that one position at a 5 lot, you close 75% of it, you let it run, okay? Depending on the situation, you have to be okay with the possibility that price may come back to your entry if you're trying to hold the trades a lot longer. You just have to be okay with that. But this is where paying attention to the macro perspective of fundamentals, where it would give you the confidence to hold trades longer because we're dealing with market shifts. This is where like we're probably going to start getting into that this week. So I will go more into that as well. But when it comes to you guys taking profits, right? I like the idea of having to take profit one, take profit two, take profit three. So when we hit those zones, just make a decision. You either close a trade, you either break even, right? Or you take partials. If you choose to let the trade run, that's fine. But when you hit a zone, the goal is to tell yourself to make a decision. Okay. And whatever really comes to your mind, where it's not like it's not scarcity, it's not FOMO, it's none of that. Whatever comes to your mind at that moment, and if you're like, okay, let me take profit, just take profit, and that's it. Whatever happens afterwards, the markets has to make a decision. Sometimes it just drops another 100 pips. If it does, it does. But the goal is just to make a decision. All right. And the way you take profit, it's just you look to the left. It's not hard, right? You could go to the 1 hour and you're looking for sales. All you're doing is going to the left and you're looking at market structure. Every time we see price action struggle to break an area, that's where you start marking off your zones. So if we hit that area, that's where you start making a decision. Don't just say, well, oh, I enter a position, my first take profit, shit, that shit is going to be all the way down here at 4,000. Like, we don't know, right? We don't know that's going to happen. But you can see how very unrealistic it is. But people do that. And they never hold it that long anyway. Most people never hold it that long. But what can separate you guys is that you're paying attention to what's going on every day. So when we hit that zone, right, you hit that TP1, that TP2, look at the markets. Is you're looking at your intermarket analysis, you're looking at risk sentiment, you're looking at the timing, you're looking at data, you're looking at price action, right? Is it making lower lows, lower highs? Is the data supporting more downside for the gold? Is news headlines supporting more downside? You get what I'm saying? Is the dollar stronger? The yields are stronger. So when you're in a trade and you hit that zone, you can focus on it and act like you're making another entry, but you're not. You're just using it to guide yourself. Either you should get out or you should hold it. Okay, guys, does that make sense? So I'm gonna just leave it at that. Like, hopefully that was helpful. Was that helpful, guys? So I'm gonna just leave it at that because now, um, like this week is gonna be important. We got rate decisions this week, and tomorrow, all right, we got consumer confidence. That's gonna be at 10. We're gonna focus on that, and we also at Asian session, we're going to go live. We're going to focus on AUD CPI, which is going to be important. Wednesday, we got the rate decisions. All right, guys. So, yeah, good job today. Okay. With your opportunities. Like, look at gold at 9 p.m. I know most of y'all guys is going to be watching it. I believe Trump is in Japan right now. So, there's going to be most likely trade deals with Japan. So, if we see some positive headlines with trade deals, most likely that's going to support more downside for gold. But I would say just like today, probably focus on technicals because we probably could get a little bit of relief, right? We could possibly get gold to push a little higher at a key zone right here, then possibly see it push lower, right? If you want to wait for what they say on in Japan, right, about the trade deals, I think that, well, I don't know, man, because I feel like the moment they signed that deal with the U.S., that's when the previous prime minister got kicked out. So I don't know how this is going to go, actually, to tell you the truth, because it's the lady right now, the new prime minister for Japan. So I don't know how that's going to go. But I would still say that China is a little bit more important, but just in case, right? Just focus on those news headlines. I'm going to go live on the stream so you guys can pay attention if you choose to. Watch the news feed. All right, guys. So remember, we got 3 rate decisions coming up this week. Well, we got 4. Tomorrow we got important data. All right, guys. So just focus on technicals for the remainder of the session. I hope that this was helpful, guys. Like, hopefully you took notes. All right, guys, and have a good one. If you guys have any questions, don't hesitate to reach out.